Good afternoon, everybody. Hope everybody's doing well. Give everybody another minute to join us. Appreciate it. Let me know if anybody has any questions, anything they want to go over. Be happy to cover that. Again, make sure you check out our pre-market prep this morning. Like I said, we posted a ton of content this morning. Some bonus content, kind of how we were looking to navigate the option structure if we did see a bounce, and that's what we talked about this morning. I think we provided a good game plan, and I think we navigated the structure very well this morning. So if anybody has any questions about that. And we'll go ahead and jump right into a few of our tools that we covered this morning, kind of what we're seeing now, where we're at within the overall structure, as well as price action. And then where do we go from here is the next question. So I'm still probably not going to cover too many individual equities, just because even after the gap down and recovery, probably after today into tomorrow morning, we'll get updates on the OI. Those notifications are in our market trend model. That's just continues buying pressure alerts. So we're still continuing to see buying pressure across the thing. So, okay, we'll go ahead and get right into it. Thanks everybody for joining us the afternoon. I hope everybody navigated the morning well, kind of where we're at. GamEdge.com. This is being brought to you by GamEdge.com. Make sure you check us out on X and YouTube. Like and subscribe. You'll be notified when we go live with our content. So, a key takeaway that we covered in our morning game plan this morning was 6,800 was going to be a very key level to either for the bulls and the bears. Below it, we were in totally put dominated gamma condition, which would have been adding negative deltas very rapidly if we got below 6,800. If we held 6,800, we were still in a put dominated gamma condition, but we had the opportunity to move up. And 6,825 was that first area that I spoke about this morning in our pre-market prep. That was going to be our first interaction area, and that'd give us a little bit more indication about possibly where we were going to go. If we got above 68.25, 68.50 was going to come pretty rapidly. That would be the next area we'd see from stalling. Obviously, we ran up towards 68.67 and then pulled back 68.40 almost to 68.50. But that first initial push there, we ran through the 25 and then we pulled back almost right to that 25 level, and then bounced off of it and then just continued to the upside. The other key takeaway is our market trend model. Our market trend model never showed significant selling at the open across our TradingView market trend model, as well as our gold standard, our TradeStation TradingView market trend model. And the good thing about this is this doesn't incorporate overnight price action. This is only the daily price action. So right at the open, we're already above our momentum moving averages. So this was indicating that we're having upward pressure in the overall market. And then our new highs were barely outpacing new lows, but our filter cumulative tick went positive right after 10 o'clock. So this is indicating the institutions or larger market participants or orders are coming through, and these are actually buying versus selling in the overall market. So we were starting to recover fairly rapidly there as we were talking about this morning. So now where we go from here? We're reaching the key area upside. We talked about 6,900. We've talked about 6,880. Both of those levels to the upside in our pre-market plan, as well as the bonus content we posted. Let's talk about some of our intraday charts that we're looking at. Let's go to our net stack command this morning. So this is our bonus content we posted. Talked about this, if we crossed key levels, what was going to be changing in the overall day and how to sequence the trading plan with our charts and our net stack command. And then now we're at 6,900. So here we are. And then we'll talk about where we're at. The net stack command I posted this morning, that was included with our bonus content. These were the key left-hand plane strikes that we were going to have to stay above for the opportunity for price appreciation. So obviously 6,800 on the net delta, net charm 67.75. These are out of the money puts sitting there. As long as we're above that level, these continue to be supportive throughout the day. And then net gamma was that key sensitivity level, 6,800. If we move below that, we're going to be adding negative deltas much more rapidly. And then net Vanna, 67.75. Obviously, if we saw a drop in volatility and out of the money calls come into the complex, then we're going to have an opportunity to move to the upside. And then the blue box was those key transition areas. Once we moved across 68.59, we actually flipped this to in the money calls. I'll show you the updated net stack command. And what does that mean? Once we cross those transition areas, then we have supportive price action and supportive structure below us. So any pullback most likely is going to be supportive. Net charm there, when we cross 69.44, we flip those to in the money calls now below us. Net gamma 69.27. That was adding, obviously we'll be adding fuel to the fire if we get above that level. Right now we're below that level. And then net Vanna 69.44. So we're still below that level also. That doesn't mean necessarily that it's going to completely have no contribution, because you can see here, obviously transition area on the right-hand plane from in the money puts to out of the money calls was 68.46. So once we crossed that, we became out of the money calls, drop in volatility, adding out of the money calls, both give you a Vanna tailwind. That right-hand plane strike was at 68.50 there. So those are key transition areas also on Vanna, as well as gamma 68.63. So again, I just drew the box around the left-hand plane to illustrate these are the two key areas we're watching to stay above, and those would provide supportive type action. And then the right-hand plane on the gamma and Vanna, once we cross those transition areas, again, providing supportive type action. So here we are. You can look at the difference between this and look at the difference between this. So now 68.50, we're actually in the money calls below us. Those will continue to be supportive. 6,900 in the money puts. It's probably going to take a significant push for us to get over the 6,900. And then you see the right-hand plane 6,900 strike charm out of the money calls. Obviously, those are larger than the net charm in the left-hand plane. So again, if we're below 6,900, these are going to continue to grow as they limit towards the limit point for the day. And again, that's going to continue to provide a headwind at 6,900 unless we see out of the money call speculation drive us through that 6,900 spot price. And then gamma 6,900, again, out of the money calls there. And then net Vanna 6,900 out of the money calls. So if we do cross above 6,900, we could actually have a significant rapid move up because of all the tailwind that will be provided via gamma, Vanna, and as well as crossing those sensitivity levels on net charm, as well as the opening of out of the money calls to drive us across that point. Our book gets longer, dealer book gets shorter, and they have to buy to hedge. So again, key sensitivity area at 6,900 overhead. Let's move on to the area this is our intraday minute command. Again, this is giving us an idea where that gamma is the highest and where our key levels are. Obviously, we see down here towards 68.50, 68.75 pullbacks there, and then 6,900 overhead. Moving on to our spec C or centroid percentiles. This is the percentage of market participants that are speculating at this key strike. So obviously everybody's stacked at 6,900 at the moment. Most likely we will see some stalling into that overhead area. And then if we do see a large pullback, we'd be looking for the 68.20 level. This will continue to probably traverse upwards. And then the P20 is roughly going to hang around 68.10, 60.15. We'd anticipate that to be supportive if we see a large pullback towards that 6,800 level. Most likely these would continue to be supportive if these continue to the upside. So again, stalling overhead is most likely through the afternoon, unless we see out of the money calls come in speculating wise via our vol M command. So I can pull that up very quickly here. Let me get an updated vol M command. And if anybody has any questions, make sure you're posting and I'll try to answer them. So here's our vol M command. Basically, this is telling us where market participants are speculating in real time as these green and red centroids move up, the bolded lines, and then as the dotted lines is our linear fit line. If all else stays on this trajectory towards the end of the day, this gives you an idea of where we might close. These will usually uncross though, as we'll see some price action or some price movement towards the end of the day. But right now, looking at 69.07 really is that price that will, trajectory. I would anticipate this to drop down a little bit, probably flatten out into 6,900, and then maybe drop down towards just below 6,900 again, unless we continue to see out of the money call speculation from market participants. We could drive above the 6,900, but the rate of change now and the slope is starting to flatten a little bit. We have the put slope obviously in a positive. This was puts closing, and then some out of the money call speculation driving to the upside. So that gives us that linear fit line and shape that you're seeing now. And this will probably, as I said, uncross This will probably drop down a little bit. The green dotted line, which is the call centroid linear fit line, will probably drop down a little bit. And I anticipate that this will flatten out at 6,900 and most likely go sideways or consolidate into the evening session here at most likely at 6,900. So we'll see how that happens. But again, just reviewing kind of what we went through this morning, obviously this bonus content, net stack command, and then looking at our market trend model. Again, the market trend model is where we start everything. That's why I cover it first off during the day. It gives us an idea of what market participants are doing real time, buying versus selling. And we want to be on the right side of the market. As I said this morning, 75% of stocks follow the overall market. And all tides or rising tide lifts all boats. So if you are anticipating price appreciation, you have to see the market trend model cooperating and moving to the upside. And that's what we saw this morning. Now, this was not a clean linear up move, obviously, in price action. It was going to be extremely choppy from our SPX game plan this morning into some of these key overhead areas. So, you saw 20, 30 point moves and pullbacks within this area at key gamma delta levels, as well as key nodes in the SPX option structure that we covered for our members this morning. But again, we had the overall plan in place that to navigate the option structure, there was an opportunity for us to move to the upside. And that's why we said we would rather remove the emotions, remove the news, remove the noise, and just study the structure. And when the price action is crossing these and what market participants are doing, how does this aid or hinder the opportunity or risk reward for price appreciation? And that is basically what we laid out this morning. And then we also had a downside thesis. Again, if we got below 6,800, we were most likely going to drive towards 6,775 and then 6,750. And there's a couple other tools. I covered our GEX ratio this morning. We were at an extreme on the GEX ratio. It was at 0.5. Historically, that's where we see a bounce. The put gamma was obviously, exceeding the call gamma by a very large margin. But historically, that's where we see some monetization. And by market participants, they got a gap down if you're holding risk over the weekend, as in puts, and then you want to get paid for that risk. So you monetize your puts. So closing those puts, our book gets less negative, more positive. The dealer book, buying back those puts, obviously they get more negative and they have to buy to hedge that negative delta. And then we see the drive up. And then now we're met with some stalling action because the market participant speculation of out of the money calls starting to wane a little bit and degrade, as noted by our vol M command that I posted. So that's kind of what we're seeing and what we're going through right now. So, all righty, okay. All right, thanks everybody for joining us. Let me know if anybody has any. I'm going to hang out just for a minute and leave this on live, and we'll be hanging out. All right, thanks everybody. Again, just went over some of our tools, just kind of hanging out, watching the price action here. Moving into those key overhead areas that I talked about, 68.90. Key areas on SPY and Qs this morning, we posted those. If we got above in trends and zero GEX, we had the opportunity to continue to move up. You see how price really interacts with those option structure levels that we're looking at, and pull back, and provide supportive type action. And then 604 on the Qs was really important. As I said, that's the in-trans level. Once you get across that, you get into more favorable environment and structure for price appreciation. Now we're above zero GEX, so we need to watch that 608 to see if it holds. And then we had P-trans above at 611. And then IWM in-trans was 6260. But you see what happens is when we cross those key sensitivity levels and structure levels, hedging has to occur. And we move into a more favorable structure and environment for price appreciation if we have puts monetizing or out of the money calls coming into the complex. One of those two, or both of those things, obviously help the overall price continue to move up. So, all right. Okay. Thanks everybody for joining us. Again, like and subscribe on X and YouTube. You'll be notified when we go live. You can interact with us on X, post some replies to our comments or ask questions. We'll get to those as soon as possible. And again, thanks for joining us for the midday market recap. We should be back here tomorrow morning with the pre-market prep. And then if we follow up this afternoon with any other additional post. But key takeaway is I anticipate stalling and consolidation into the 68.90, 68.80 to 6,900 overhead. Again, unless we see out of the money call speculation come in via market participants. But most likely we're probably going to stall for the rest of the afternoon. So, all right. Thanks, everybody. Have a great day.